Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, September 9th. Well, we did get a nice little reprieve rally from last week. Friday we had non-farm payrolls numbers that came out, and sure enough, being the holiday weekend here in the States, markets actually took a little bit of a nosedive with lack of liquidity. And sure enough, we get a little bit of a rally on Tuesday. Some of the bigger players coming back, scooping up some of the undervalued stocks in the markets, and we get a nice little rally. We're still up in the pre-market yet again, actually up almost 20 handles in the ES in 1985. So does that market hold here? Does the market hold, and do we continue to move higher? Well, that's yet to be seen. I'm going to show you weekly charts, daily charts. Daily charts are a little bit skewed. We have bear flags and bull flags upon us in the indices that we follow. Weekly charts tell a totally different picture, as well as the monthly, which in front of you is the Spider monthly chart, and I'm going to go over that with you. I've been saying in the last maybe few weeks, I've been saying that I'm thinking the way the markets have been reacting, and we were looking for some strength early in August, which we did not get. We got weakness in August, and now we're getting a little bit of a bounce back. But as we all know, seasonality, it's the September and October which are notorious for market corrections and at least pullbacks. So since we had a vicious August, and we had 5 days down, which were down almost 11%, and now when we rallied, we've been trying to rally, for 10 days, and all we did was reach back up to the top end of this little cluster, which I'm going to show you. So I'm nervous about the markets. I want to be on high alert for a deeper downside correction in the next couple of weeks, 2 to 4 weeks. I'm looking for. We're up the last couple of days because China had a sort of a relief rally. That to me is not that's not good enough for me. The Fed on the 16th, they're going to decide if they're going to raise rates or not. That's also a deciding factor. Now, raising rates, believe it or not, is a good thing. That tells us that the economy is humming along, that we're getting healthy again. But obviously, in the short term, we're going to get a little bit of a blip lower. But any kind of remarks that they are going to move forward with raising rates sooner rather than later is going to send the markets lower. Now, the reason why we're up the last couple of days is, aside from China, right, the market participants are looking for, oh, they're not going to raise rates, they're going to have more QE. Now, that is just absolutely silly. I would not be buying stocks due to that. If you're trading, that's one thing, but I would not be adding to your portfolio for the longer term guys that are that trade the longer term charts. Now let's just take a quick look at the monthly, and you can see here all we're doing is back testing the 20-month moving average. We haven't broke the 20-month moving average in quite some time. If you can see, way back here in 2009, that's the market crash, and sure enough, we got back up above it just after the 2009. So we've been holding true. Aside from this little blip back up again, this is what I'm anticipating, right? If we're going to move higher, like here in July of 2012, it better happen this month. Otherwise, we back test and we start to fail and we test these lows here. Take a look at the weekly chart. Weekly chart is by far a horrible looking chart. Damage has been done to the sell-off in August. We've had a 2012 uptrend line that's never been violated, okay? You can see here, never been violated, and sure enough, we just pierced and ripped right through this uptrend line, which to me is pretty much significant, because if holding back since 2012, you have to take notice that we've had a major selling in the marketplace. Now, if you look, let's get a little deeper here. You could see the last couple of weeks, we haven't even taken back the previous week's high. We're still within an inside week for the last 2 weeks. Not a good sign. We cannot get enough buying power, enough buying pressure to push this market to at least back test this. So this, to me, even if we back test this upper trend line and fail, that's going to be a great short, okay? To even show that we haven't even got back above the 199 area in the Spider weekly chart is also damage enough to say that the markets are very weak here, okay? Take a look at the daily chart. You can see what I'm saying. Here is a bear flag, and as you can see, we're just touching the upper end of the bear flag here. And also, we have this area, this resistance band that comes into play just above the 50% moving average, the 50% Fibonacci retracement area, we haven't even rallied to the 61.8% retracement yet. Remember, the 20-day moving average is here and the 50 in red. So even if we were to break through that today and get back to the 61.8% retracement, this will be a fantastic shorting opportunity right in this area here, 203-ish in the spiders, if we even get that far. I'm thinking that we get up a little bit, and then we're going to have the fund sell into this yet again. Okay, remember, guys, September, October is notorious for selling. All right? And this, to me, does not look pretty. Now, we did alleviate some of this momentum, downside pressure, but look what's happening here. We haven't even gotten to the 50% in the RSI. If we had any type of strength, okay, as we had up here, we were holding above 50% pretty much, and then we bounced lower, right? And then we just came back up again. And as you can see here, we're continually below the 50 percentile in the RSI. MACD can't even get a crossover to the upside. Not a good sign. Don't get caught up with the pundits and the talking heads in CNBC and Fox Business and whatever station you're looking at. A lot of them are just writers. They don't know anything about technical analysis. And just be true to yourself. Make sure you do your own homework. Don't even take my my trading ideas here. Make sure that what you're doing fits with your trading plan, okay? This is just analysis here and changes every day. But when you're looking at what's happening here, and then everybody, the talking heads start putting their pom-poms on and start cheerleading the market, this is not a good time to be cheerleading. You have to be defensive now on your positionings in your portfolio to make sure that you're not going to get suckered in here. Now, we have a lot of work to do to the upside to alleviate this downside pressure. Very, very important here. And right now, to me, this is not doing so, okay? Take a look at the IWM weekly. All we did was get back into this area of this support area here. As you can see, this rectangle horizontal trend line support that we have here on the low. We tagged it right to the penny, and we haven't even really rallied to get back above this area of resistance. We're stuck in this area here on the weekly chart. Same thing. Now take a look at the daily. The daily shows a little bit of a different picture. Now the overall trend is lower lows and lower highs. We do have bearish symmetry here, and as you can see, this one here has a bull flag. So we have a little bit of strength in the Russell and some weakness in the other markets. Now the Russell is our secondary leader here of the 5 that we follow. So that is a good sign, but all we did really is tag the 20, not even really tagged it as of yet, and into this resistance band. But look, we haven't even rallied 38% retracement off of from high to low here, where some of the other asset classes that we're looking at has done so. This is not a good sign that we're only getting to the 38% retracement. That's not good. Okay, so that's something we have to pay attention to. Another one, the transports, the weekly chart. Look at what's happening here, guys. This is not a good sign. We broke, again, this uptrend line since 2012. We're making lower lows and lower highs. We already tagged the 200-week moving average, and now we're just back down here again. So my guess is that we continue and we at least test the lows, if not go lower in the next several weeks here, okay? I'm looking at 2 to 4 weeks, maybe even a little bit longer. Obviously, we don't have a crystal ball here, but from what I'm seeing and from how we're rallying and why we're rallying is not a good sign. Okay, transport daily chart. We're tagging this downtrend line again, and as you can see here, we just literally collapsed. Now the transports come into some seasonal strength right around October, obviously into the holiday season. So let's keep an eye on what the transports do here and get some clues. Now another good sign is technology. Now technology has been holding up all of 2014 and 15 pretty well, and it has rallied back 61.8%, as you can see here, right? So that's a good sign. And technology comes into some seasonal plays as well. October going into December, mid-September going into November, late November. They have more spending and they start picking up on their production. So this is actually going to be a very good sign as well. But remember, guys, once fear hits the market, it travels very fast. Okay, so a lot of players and investors, they sell good assets to pay for the bad, unfortunately, and that's how it works. Diamonds, yet again, barely rallied above the 50%, and as you can see here, this is where I showed you in the last video. I said, look, this low is going to need to hold, and sure enough, that's what happened on Friday. All of the indices that I just showed you tested or were near the previous low from 9.2, okay? So now we're just basically in a range here, and they're all the same. You could just see this here. We're just basically in a range and underneath the 20-day moving average. Again, not a good sign. This, to me, doesn't tell me that this market is strong and healthy. Okay, I would be looking to pick a spot in your favorite asset class and look to short on any type of big retracement, because I don't think that this market is headed higher anytime soon. Does it market S&P go up another 30, 40, 50 points from here? Sure. Things do change. Things change rapidly. So we could be changing our analysis tomorrow. But in the short term, between the next 2 to 4 weeks, I would suspect the markets test the lows, if not go lower. Okay? So just keep that in mind, and we'll give you updates accordingly to this analysis as the trading days go on. Okay? Hope it helps everybody. Have a great trading day. We'll speak to you tomorrow. Take care.